Today, the S&P stock market index is back above 5,000 again, and some wealthy investors are preparing for the coming stock market correction. As we all know, the stock market does not go up in a straight line. It goes up, down, up, down, up, down, up in a waveform pattern. And these wealthy investors have very good timing in the market corrections to reduce their risk in order to maximize their profits. So in this video, we will show you how these wealthy investors are trading to reduce their risk and maximize profits, because we all know the rich get richer, and this is one of their ways. And that is why on this channel we follow their trades so we can also make more money. Without further ado, let's get to the data of the trades of these wealthy investors. We will be looking at the SPY ETF that tracks the S&P 500 stock market index, because the options that are being traded on this ETF is how a lot of wealthy investors trade with to hedge their portfolios. As you can see from the options time and sales tape data today, we had 100,000 contracts. We also have these 50,000 contracts. And so we can see here that the timing of this trade indicates that this is the same wealthy investor making this trade, because they are just 7 seconds apart from each other. Okay, very large trades expiring April 19, 2024, and 3 different strike prices: 400 strike puts, 425 strike puts, and the 375 strike puts. And when we add the 400 strike puts, we can see that it's 200,000. And when we add the 425s, we have 100,000, and the 375s, another 100,000. So what is going on here? Let's take a deeper look at the option chain for the April 19th. So this expires in about 64 days, so about 2 months. So we expect a market correction within these 2 months. And you can see here at the 375 strike puts, the volume of 100,000, 400 strike puts, 200,000, 425 strike puts, 100,000. You can see that all 3 strike prices greater volume than the open interest. Okay, so we know that these are opening trades. We are also in this position. You can see our positions here at the same strike prices where we are following this trade, because most of our current trades are bullish and going long on different stocks in the stock market. And so this is one way where we can use the SPY ETF to hedge all of our positions in our portfolio, because all of our stocks are mostly bullish. If you are interested in the stocks that we are trading, make sure to go to our website. We'll put a link at the top here. The stocks that we trade are all the same trades that the wealthy investors are trading, because that's what we do. We trade only the trades that the rich are trading, because that increases the probability of profit for us. So check it out on our website, where you can learn how to gain access to the stocks. But keep in mind, we are in hedges using the SPY, because we also expect a stock market correction coming up soon. And this is the strategy that we are using, the same one that the wealthy investors are using as well. What they are doing and what we are doing is we are selling the 400 strike puts. For each of our trades, we are selling 2. And then we are buying the 375 strike put and then the 425 strike put. And when you analyze this trade, you can see this trade here on the profit loss diagram. On the y-axis, we have the profit loss. Anything above is profit. Anything below is a loss. When the lines are below is a loss. When they're above, it is a profit. So you can see the line here. And on the x-axis is the price of the SPY ETF. So we are currently trading at 502. Okay, so you can see here that as the price goes down, this trade becomes more profitable and increases. This trade, just one trade, very cheap, just $13. Okay, so we're able to position size based on how large our portfolio is, decide how many contracts we want, right? And we can see that this wealthy investor purchased 100,000 of them. Okay, so you can see that their potential profits is a lot more because of the amount that they purchased. Okay, let's put this back to 1 so you can see the deltas here. All right, so the Greeks, we have a negative 0.76. So each of these trades is a negative delta. So that's a bearish short position. Okay, and we can, as we explained, you can decide how many you want based on how much risk you want to take on. And so this is how we are hedging as well, using this strategy known as the butterfly trade. Okay, so based on this data, we can see they cost $13 and they did 100,000 contracts. So this was about $1.3 million. Okay, so keep that in mind, that this is not necessarily very large, especially since the SPY ETF has a lot of trades happening, but it is quite unusual that there was this amount of hedging being purchased today when the market broke above 5,000, because hedges are actually cheaper when the market is near a high. Okay, short positions. So this could be the beginning of this wealthy investor building a position to hedge and start adding on, because as the market moves up, these hedges that cost $13 now will actually get cheaper, because you can see if the market goes up, it starts to lose in value here, right? That's the negative here. So it will become cheaper and cheaper to buy these hedges. And you can see that if the market goes down, it only has to go down to 489 for this to be a profit of $13 when we initially spent $13. So that's a 100% profit at just 489. So you can see the strategy does not need to go all the way down to 400. That's not what it is intended to be. Although if it does go down and crash down, you can see how much profit they could be making. $500 per trade. okay, $500. And we know how much they bought, right? They bought 100,000 contracts. That's $50 million for just an investment of 1 million. So that's quite a lot of profits if the market crashes using this type of option strategy. Okay, so this is why we hedge our portfolios to reduce our risk when we have a lot of bullish long positions on individual stock picks that we are trading. Again, if you are interested in the stocks that we are trading, make sure to go to our website to learn where and how you can gain access to the trades that the wealthy investors are trading. Please smash the like button. Let us know in the comments below if you think the market will pull back soon, correct itself. Let us know. And as usual, please subscribe if you haven't, and have a wonderful day.